Hey traders, what's going on? Jamie Saettele here. Midweek strategy webinar, it's Thursday, November 2nd. Give me one sec here real quick. Hold on. Alrighty. Okay, getting started here. Let me know real quick, folks, that you can hear. Pooja saying hello, I think. Hold on. I'm seeing some messages here. AB, good. All right, great. Okay, here says Thomas. Pooja says, nice call on pound kiwi last week. Yeah, you know, they've had some moves in isolation, I guess. Not the cleanest, broad-based picture in, say, cable right now. Something that we'll touch on here in just a moment. We will start. I'm going to spend a little less time actually on some of the currencies, simply because right now there's not a whole lot of clarity for me. I had a conversation with someone about this yesterday. You go through times, periods of the year where you don't, there'll be like a couple weeks, right? Maybe longer, where you're just like, what the hell's going on? Like, you just don't know, right? You just have no clue what's happening. And then all of a sudden, over the course of a couple days, it starts to get really clear. So I'm thinking / hoping that's kind of where we are right now, and that we're starting to get a little more clarity. And it all starts right here. Okay, this is the 10-year Treasury note yield. Okay, end of day chart. So, generally speaking, higher yields, higher dollar yen. All right, you kind of have to know the environment that you're in. So what's happened lately? We've had this rally, in equities. Yields for the most part have been rallying, right? This is actually back in September, right? Early September. Remember, we had that gap open that next week, and we turned higher, sharply higher. And that's really when the Nikkei started its run. Dollar yen started going higher, although dollar yen hasn't really done much of anything compared to the Nikkei. But point being, this was, this rally in yields is really where it kind of started. It's also when we started to see crude oil tick up, and that's interesting too, because we're pressing just massive resistance potentially here in crude. So we're going to try to put things together here. But it all starts, for me, with the yield picture, and we can look at the 30-year yield picture as well. So TYX on your trading view is simply going to be your ticker there. You can see this picture really long term. We're going back to the original trend line on yield back to 1981 and 1984, and you can see how well defined the pivots are on the associated parallels. And this line in blue, I'm wondering if that is essentially where we might be headed. It would be about 2.43, right, on the long bond yield. And if we can get down into that region, that could end up setting the stage for a much larger bottoming process in yield. Right, so a move from there to here would be quite significant. I was thinking that we were actually going to stretch a little higher in the 30, 30 up to 310-ish, whatever. Maybe take out the May high in yield, which was 305. But we've turned sharply lower. This is a weekly chart, okay, and I showed yesterday in the update, but you had the 5-wave move in 10-year yields. So that, suggestive to me at least that turn or that pivot at the recent high in yield might actually be more important than, than I might initially think. Okay. So, that's kind of where it starts for me right now as far as, looking for or waiting for that clarity, if you will. And it plays well, of course, with what we're going to talk about right now, which is US dollar. So we had that breakout And here's that weekly chart. And we have talked about this median line, lots of pivots around it. If we go to the daily, right, let's even go to 240 minute. Trend line, it's actually not a trend line, it's a shift, actually, is it a trend line? Hold on. Yeah, it is. It's a shift fork. So it's not a trend line, it's a shift fork. And to me, this is still very much up in the air, right? You had the head and shoulders breakout, so let's kind of, make notes on what we see here. Let's start with the observations and work from there. Okay. So first, long-term uptrend, but broke the median line, have come back to test the median line, and that's where we're sitting. Don't forget we have the seasonals that turn down starting really in 2 weeks, right? It's really the week that starts, well, not completely 2 weeks. It's the week that starts the 13th. That would be a Monday. So 12th would be a Sunday. So the week that ends the 17th is, so we could have another week of the dollar holding up, maybe not quite ready to spill yet. That's really what I've been waiting for. I'd like to see all this kind of come together, but from here, it's to me very much up in the air. So the longer term picture, you have the median line being tested as resistance, just as it was back in October 6th, NFP, by the way, and there's another NFP tomorrow, just as it was back in August. Well, in the near term picture, you do have this head and shoulders breakout, and we failed at trendline resistance, and we've come back, and look at where last night's low is. What was that? Last night's low is made during Europe or Asia. It would have been made during Asia. It was actually, I guess that was in kind of dollar yen was coming off a little bit. A lot of this is going to be cable too. But look at the level that we've held as support, 12.011. That's the spike election low from a year ago. We are almost 1 year on, and we haven't net budged in the S&P. Is that wild or what? Or sorry, in the U.S. dollar, is that wild or what? Markets have a way of just doing sick things. So, to me, is there a trade here? Not really. There's some individual spots, I think, in dollar stuff to do, to take a stand, but generally speaking, strong dollar bias, weak dollar bias, I don't really see it here, not yet, so it's not, advantageous really to say, well, I'm just going to look for dollar short opportunities, or I'm just going to look for dollar long opportunities, right? I don't see that here just yet. Again, that probably changes. And my thinking is that it probably changes towards looking for dollar short opportunities, starting, in 5 to 6 days, as per that, that analog, the seasonality, et cetera, et cetera. So don't try to force anything. Again, I've been pretty quiet lately on the stream, right? Just because there hasn't been a lot of clarity, and why try to force yourself into trades when, quite frankly, it's not too clean. I mean, there's going to be little hitters here and there, right? Like I'll put out a thing, say, oh, the euro's testing a level, or Aussie's testing a level, or whatever, right? But that's different from saying I'm taking a stand here. I'm looking for a 100 point, 200 point, 300 point move. All right. Go to euro real quick. We'll look at dollar Swiss. Look at the commodity currencies, a couple crosses, and then I actually want to spend some time on stock indices. Those are obviously starting to get a little more interesting. And maybe we can have more questions today. All right, let's go to euro. We'll do some momentum work here today too. I think that would be a a good thing to do. All right, so here is our euro chart, daily chart. Okay. To this point, and you're looking at a daily chart here, but to this point, we've kind of held, consolidated, what have you, around the low or the high from 2016. Again, the bigger, cleaner, really, really good looking level on here is probably going to be this blue line, and we were thinking 1460s. Would have kind of liked to see us get there by now, considering that the intersection with this blue line would have already happened. But the blue line is still there. It's still something to be aware of and pay attention to. If we get there from a trading perspective, obviously you're going to want to be looking at this channel, downward sloping channel that goes back to the high. And for the last day, I guess this would have been last night, right? And then this is just now. We've been pressing into a near-term decision area for euro. Again, I don't care if euro goes up or down here. My broader thought process is that we are in a longer-term dollar downtrend. So presumably euro higher. But again, that on a day-to-day basis, week-to-week basis, even month-to-month basis, that doesn't mean that you blindly are long euro dollar. So, let's say right here, if I'm looking at this, I see downside pressure as a possibility on euro. All right, this is that same blue line right down here. Okay, it's below 115. So certainly a possibility. Obviously, NFPs tomorrow too. But let's say as well that, let's say we do tick higher here, right? Let's say we break through this tomorrow. My guess would be that you probably are going to see resistance up near 1769, which remember is the longer term median line. All right, we can get a better look at that on this chart. So here's that weekly chart. Here's that median line, again, election. And since then, you've had consolidation around it. You've had support around it, some false breaks, but generally speaking, a pretty good spot to know. And of course, the 1769 level is actually the ECB level from 1 week ago. So after all that, we really haven't done a whole lot, right? Kind of traded off the lows and not that different from where we were 1 week ago after the ECB supposedly destroyed the euro. One thing that is, I guess, still in the back of my mind, I can't wait to see what the COT numbers look like this week, because remember, we've got really crowded positioning on euro long side, Aussie long side, CAD long side, pound long side, although not as much as it was. So all this dollar, kind of holding up, to me, is a function of that positioning needing to get wiped out, right? The point of these dips, in euro, rally in dollar, is to question the longer term trend, right? And once it plays out, and once we have those that positioning kind of get cleaned up, I think that the euro will be allowed to rally and the dollar will be allowed to decline, as it has since the start of the year. But yeah, price levels, right? You're going to want to know if they're 1639 at this point. I mean, that's just the month open. More or less now is resistance, but let NFP play out, and I'd be looking, if we do pop higher, your initial resistance is going to be 1769. If we take a dump lower, probably looking down towards that 1489 area, maybe 1460 for the buy. But as of this second, as I sit here and I talk right now, not a whole lot of clarity, nothing for me to do from a trading standpoint. Okay, dollar Swiss is actually one that I think might be giving us some clues here. So dollar Swiss. Okay. It's got this. Probably going to have support down near 98. Right. We're looking at a daily chart here now, but you're probably going to support down near 98. This fork continues to play out pretty well. 75 line resistance. So if you can make your way down towards the 25 line, which has been really good support for the most part. In fact, you can probably actually move it out a little bit. Probably something like that, right? But you can see how beautiful price is traded on. This is probably the cleanest structure out there at the moment. You know, which is funny because dollar Swiss has been just so dirty for so long, and now it's actually the cleanest one, at least on this daily chart. So really clean resistance on the median line, right? All throughout September, October. Okay, finding resistance. I think the best support here is probably going to be around this 98 figure. If you pull back, you know, from here, which is a decent pullback, right? You're talking over 2 big figures from the high, and I actually think that's a possibility, if not likely, because of the long-term trend line, right? Right here. So here's that long-term trend line. Beautiful support throughout May 2015, May 2016, August 2016, the election, and we just have been trading around it for basically 1, 2, 3, the last 5 trading days. So well-defined level, to me, you know, can aid in suggesting that you have a, you know, possibility of a decent pullback from here. So dollar Swiss might actually be one of the cleaner things to watch at the moment. Which, you know, I haven't said that in too many times over the last few years. But yeah, pay attention to dollar Swiss. Let's go to that dollar yen in 10-year yield chart. Give me 1 sec here. I want to see something real quick. Okay, that's what I thought too. So here's another reason why we think that this 98 region in dollar Swiss could be so important. $200 days down there. Ding, right? So a lot going on around that 98 figure. All right, so TNX. Okay, so here's the chart from last night. Actually, this is the chart from last night, arithmetic scale. So we did get the underside of that trend line. We have poked or scooted a little bit lower here. Does not change the idea, call, whatever you want to say, for a recovery, just to correct a 5-wave move to the downside. Right, would be looking for that resistance up above 240 242. Again, this is 10-year yield. But where this becomes useful, for at least for us and for a trader, someone trading currencies, is looking at dollar yen, right? So dollar yen, go to a line chart here. We'll put it in red. Dollar yen, I mean, these two, you know, they, for the most part, they're going to be moving together. It might not seem like they have moved together over the last couple, you know, of days or, you know, week, if you will, but they really have. I mean, turn down, once we got the pressure on downside and yields, dollar yen hasn't really been able to, you know, to get its legs under it and break out and go to 115. Or even 115.50, which is where I think the next level is. And that's despite the fact that the Nikkei is trading up close to the 1996 high. All right. So again, the comparison I made, this reminds me of kind of July when, you know, it was dollar yen. It was like holding a beach ball underwater, right? And it was, you know, we had resistance. You just knew this thing was going to roll over, but you really started to question it because it just wasn't happening. Well, looking at the 10-year yield, I think, can give you a little more confidence in the fact that, you know what, I think we are seeing this correctly. I think that dollar yen is going to roll over. And we have that here, just as we had the 10-year yield roll over, dollar yen kind of topped on its secondary high in 10-year, right? You kind of had a drop and then a pop in 10-year. Dollar yen finally made its high. So, you know, for me, I don't know if the high that we just made in dollar yen, if that is a high or the high, or if we need to poke out one more, maybe on an NFP spike or something. I don't know. It's just not clear to me right now. Okay. Obviously, after tomorrow, hopefully we do have clarity and we actually can put on a trade. As it is now, we are just consolidating around, you know, it's a nothing week right now. We opened the week at 1370. There's a high volume level at 1384. I mean, we haven't really moved from that area, okay? So, you know, there's nothing to do here. If you do get an NFP spike, if it's a quick move, maybe all the way up towards 115, the red parallel, I mean, these red parallels have been beautiful in the short-term chart, then that's a fade, all right? You know, if we start to break down a little bit, you know, we'll be looking for resistance probably back at 1370 to 114, you know, if we drop and then pop, right? So at this point, don't, you know, try to force a trade here on dollar yen. I think it's topping. I don't know if it has topped, right? And hopefully the 10-year yield gives us, you know, gives us the entry basically, right? This is the clean chart. Got 5 down, a little rebound. Maybe that correlates, you know, or coincident with one final push in dollar yen, and then we can really come off. Right? But there's a story being told here with the 10-year yield. Dollar Swiss hitting resistance, looking like it can drop a couple hundred points before there's even initial support, and you know, the dynamic between 10-year and dollar yen, and that's going to take us to the equity markets, which we are starting to see. I guess you'd call it a mini change in behavior, right? At least the market is kind of trading in both directions at this point. If we go to the S&P, this is a shift fork from 829, and you can see that the lower parallel was cracked on 1025, but we held it, and we are getting the market testing it here this morning. So, you know, resolution may be near. You know, close a day down here, and I think you probably actually do have some downside in the cards on the S&P, right? The NASDAQ, weekly NASDAQ chart. Okay, we had a J spike yesterday, and we actually are following through on the downside. Mahai is saying, talk about DAX. My man, you know I've got the DAX ready for you, right? I definitely got it. I was looking at it right before because I knew Mahai was going to come up and he was going to say, will you please look at the DAX? So I got it down. But the NASDAQ J spike yesterday, we haven't had one of those since over here in July, which was a temporary high. Let me just show you what those look like over here. Okay, so here, again, your magenta bars, J spike, right? Key reversal with a volatility condition. The volatility condition being that you have to have the, the range has to be as large or larger than the, the ATR, 20-day ATR. So you can't have a small range reversal. So had one yesterday. We are following through on that. The line, by the way, on this chart, so it's simply the fork, and then it's an 87.5%. So it's, if you go in eighths, right, it would be all the way, it'd be a, essentially 7/8 of the way up. But daily J spike falling through the downside, that's a good sign if you are looking for a turn, obviously. You can see the ones that we've had. Look, sometimes they work, sometimes they don't. It's a combination of a lot of things, of course. When you have it and you're pressing this level, we have a level up here, and we're seeing the dynamics with the 10-year yield and the bonds and dollar yen maybe trying to poke or turn down, and dollar Swiss, et cetera, et cetera. It gives me maybe a little more confidence that this one might work. So I'd pay attention there. NASDAQ very toppy in my opinion up here. We've seen things like small caps, right? Consolidation at this point, but has not been able to make a new high, and actually had the J spike back on 10.9 is still the high. So after yesterday's big move where you basically engulfed the last 17 days, again, maybe a sign that something is not well here. You're going to get some sort of a change of behavior. Moving to the Nikkei, watch the Nikkei, right? So I've got this gold bold line up here, which is 22,751. That is the 1996 high. Okay. For those of you that are familiar with DSI, the Daily Sentiment Index, I do not receive it, but sometimes someone will, a friend will say, hey, guess what? This market hit this level today. Well, yesterday the DSI on the Nikkei was 95. Okay, I don't recall a time being above 91 or 92 on the index. That's quite significant. So needless to say, that is short-term sentiment, but short-term sentiment is awfully cooked, and we are trading on the top of this short-term parallel or short-term fork going back to 828. So again, add this into the the fire, add it to the mix that there's another reason, if you will, to suspect that we are topping in the Nikkei. If I'm looking at this chart, to me, this looks like, go from the 1025 low, but a 1, 2, 3, maybe this is all 4. Make one more pop, right? One more pop, and that's all she wrote. So maybe one more pop on the Nikkei, maybe go into that 22,751 area, and then just, good night, right? at least for a while. I think that the long-term support on this is going to be down near 20,500. So that's 2,000 points. You're talking about 10% on the downside. That's not, anything to sneeze at. Again, these long-term parallels, there's the blue line right here, okay? That's simply based on the trend line back to 2009, 2011, all right? So I do think we head back there 10% lower, maybe, how about a Friday high? Friday high tomorrow? Anyone? Short the crap out of it up here. All right, the DAX, let's go to the DAX. Mahai, we've reached the level that we were talking about, right? That's the parallel, this magenta parallel. I guess it's a little higher than the level we mentioned, which was 13.3 something, because we got up to 13.492, it looks like. And that's dollar yen, by the way. I've got this too. So there's a couple different slopes. To me, this is, classic spot to top, really. I mean, you've got the parallel. This is back to the February low. A lot of times those original slope levels, they do work quite well. And in this case, you can also count 5 waves up from down here. So that's from the June Brexit low. So 1, 2, 3, 4, 5, right? Now that brings in the question, of course, that this would be 1, 2, and this is all 3. Therefore, the next drop is just a 4, and then we go higher again. Even if that's the case, your 4 should be pretty deep, right? I mean, you look for the 4 to get back into the area of, kind of the former fourth wave extreme, which would be down here. Mahai saying going to 12,800, 12,900 in new high. Oh, yeah. So, sorry. Yeah, the exact level, look, I can't say here because I don't know. But clearly you're going to want to pay attention to the high back here from 2015. I do think we roll over for a bit. Don't forget Euro Yen made a weekly J spike. You go back to the the charts from the weekend post, and you can see that that's pretty important. And that typically is going to Euro Yen, right? J spike. These really didn't work, but some work just extremely well, right? I mean, short, long, short, long, really wouldn't have worked. These wouldn't have worked. That would have worked beautifully. That was right before the election, of course, the French election. No, was it French? Yeah, it was the French election. And then we had this one here last week. So if I take the DAX, throw Euro Yen on it, right? Is it perfect? No. But generally speaking, the big turns, the big pivots, Brexit low, and now we have this. So yeah, I'm looking for a turn lower. I'd throw on a 200-day average, see where that goes. $200-day average support here back in August, and if you were to drop quickly, it could be in line with the high from 2015 anyway, which I just simply, Mahai and everyone else, I would watch this line, okay? This upper parallel, right? I mean, that was support back here. It wasn't support back, back in August, but that doesn't mean it can't be support again. Especially if we do turn down from here, because that would mean that you do have a very well-defined parallel, kind of thing in play here. And so you would be expecting the next low to be on the parallel anyway, right? So just pay attention to the parallel. That's my suggestion at this point. Okay. All right, let's look at some commodity currencies real quick. We'll go to Aussie and Kiwi and CAD. We can do a couple crosses and take some questions. All right. So the Australian dollar, near-term picture. I put this up last night on Twitter, but you can see the thinking here from the high back in on 9/8, looking at a 1, 2, 3, with this being 1, 2, 3, 4, 5. Fourth wave up, 1, 2, 3, treating this bounce as a 4, so looking for one more drop, right? And thinking that it will probably be on this parallel right here. So around 76 for the low. That begs the question, I guess, trading-wise, not really down to just put the Aussie short on right in front of NFP. It's something that's a possibility after the, after the number comes out. See what it looks like. But longer term, if I can find the longer term chart, hold on here. NASDAQ starting to really get hit. 43 points, 44 points. I think Apple earnings are later. Let's see what some of these tech stocks are doing right now. Coffee's up 3% today. Yeah, Tesla's down 8. Facebook almost 3. Amazon 1.5. Okay. All right. Where were we? I just kind of lost my. Oh yeah, Aussie. So longer term though, the thing with Aussie. So while I'm looking for that low, right, that next low, that final low in this move from 9/8, you do have like a really good support down here. So this is the trend line from 2011 to 2012, and this was support. Okay, you can probe below it a little bit like we did back here, but that's this line. Okay, that's right here. So can we get one more drop, right? This doesn't need to be blue anymore, by the way. But can we get one more drop? Not sure you get all the way down there either, but can we get one more drop to make 5 from here? And if you do, right, then it's a bigger buy. So while I'm looking at Aussie being at a near-term top right now, I do think that the next drop is actually a buy. So, good resistance here. Obviously, NFPs go either way, but after the number's out and done with, I think that we'll probably be looking at a a short. At least that's what I'm heading into the event thinking. Kiwi is similar, not surprisingly. I had the order last night. Was hoping for an early kind of an Asia dip onto this blue line because you have such clean support here, right? This was support, this was resistance, resistance, went through it on the Aussie, or sorry, the Kiwi employment data. And if we pull back to it, you know, I'd still look at it as support, but you want to pull back to it before you go up here. So like if we were to go, you know, up into this broader resistance, then I'm thinking it's actually a sell. So a little different than Aussie in that Aussie, I think, is already at resistance. At least I have it at resistance already. Kiwi, by the way, is trading around its year open right now, 69.27. But if we look at the bigger picture chart, right? Let's remember that the main thing to pay attention to here, the biggest thing to pay attention to, is probably the underside of the trend line, right? So that's going to be 69.70, 69.80, and then probably looking for more downside. So with Kiwi, there's a couple different ways to play it, right? Was looking for the rally off of the blue line here. But if we go straight up into this, say on NFPs, you know, then I do think I think Kiwi's a sell at that point, right? And I'd be looking for initially, be talking about probably going to maybe 67.20, which is the lower parallel in the 618 of the entire rally from 2015. That would be the next area to pay attention to, in my opinion. Okay. Eventually, you could get something down near that 65 area, mid-64s. That's the long-term median line, 786 retracement, and then the weekly reversal support from the close in 2015. But you know, that's probably a ways off. I don't think you're going to go there in a straight shot. Either way, best bet for a short, in my opinion, is NFP spike high and fade it. Okay, dollar CAD. Bigger pick, dollar CAD. Again, kind of no man's land a little bit. You'd have two legs up from the low in September at 29.69, which is the exact price of the January low. So that seems to me like it would be the best possible place to find a top, or you know, some sort of important resistance. If I zoom in here and go 4-hour chart, you know, you can kind of count that. You know, this, if that's your A, B, and then this is 1, 2, 3, and this is a fourth wave drop, right? Then you're looking at, you're kind of looking for support around here. Maybe a little lower. 27.86 is the high volume level, I guess, from BOC last week. Excuse me, that was 10.25. So, you know, trading wise, I'd be looking at this pullback and buying into 27.86 or so, and treating this as an ABC drop, and then looking for that final push higher into 29.70 or so, right? So you can see here, oh, I didn't really concentrate on this or explain it, but you probably know what I'm doing anyway. So trend line, right, make the channel, well-defined, crosses through these highs, right? So you've got something there, and that's kind of where you're looking for support. Not saying you can't spike below it real quick, of course, but that's where you're looking for, you know, where you should see support if you're going to push out to one more high, right? And then what we'd actually do there is throw another one on there, right? Off of this high. And then you can look for the high up here on 29.69. So that's my best bet here, 27.86, 29.70 or so, kind of the two levels to trade between for the next, you know, day or so. who knows? This could all happen, obviously, on NFP too. I mean, because I think you have CAD jobs data tomorrow too, don't you? Yeah, you got CAD jobs tomorrow too. So you got the double duty here. It's CAD jobs in US. All right, why don't we look at pound yen real quick and euro yen. Yeah, pound dollar, by the way, I don't really have much of a thought at this point. I am kind of happy I haven't really been trading it because, well, at least this week. Last week, obviously, it kind of, ate it there, but I mean, this thing is brutal. So I will echo the Bank of America guy that said it's nearly impossible to trade right now. I wholeheartedly agree with that sentiment. Okay, so here is euro yen. Again, the J spike on the weekly chart. My thinking here, if I go to an hourly chart, by the way, this fork is in play. Okay, this is something that you want to pay attention to, because the median line most certainly did, its work, right? It was support, so you'd be looking for the next high on an associated parallel. The next level I've got on the upside is probably around 33.60. 33.33 is the 618. However, you don't really have anything there on a slow perspective, and I'd like to, see something on a slow perspective, more so than necessarily just a horizontal level, especially a fib. So the next level I've got on the upside is going to be probably over here somewhere, 33.60s, right? Yeah, but the question that was asked on Twitter before, a near term, this to me looks like an A wave. So we're talking 1, 2, I guess 3, 4, and a 5 diagonal. So very near term, I'd be looking for a pullback down here at about 32.30 before you can get one more push. So that would be your A, B, C. Okay. And then lower, obviously. All right, pound yen. Dirty, dirty, dirty. All right, so pound yen wiping it out today. This is log scale, by the way. Yes, it is. Pay close attention to the blue line. Okay. That is the trend line, obviously, from October of 2016, which was the low, and then April of this year. And that line has been support, right? It was support back in June. You broke and it was resistance in August, and then we quite nearly touched it on September BOE. Did not quite touch it. Very close. So to me, it's kind of, it's an important spot. I mean, if you get below it, it certainly at minimum delays anything on the upside, and perhaps, maybe offers a reason to attempt the short side. But pound's a little much for me at this point with all the way it trades. So I am more willing to trade something like euro yen, even an Aussie yen or a Kiwi yen for that matter. Let's see what the near-term chart looks like. Because you might get a fork on this too. So nothing yet, because we haven't traded to the median line yet, but this could be something that's in play, right? If I look at this from this manner, full channel here, maybe you get, if you get a rebound from down here, which would be the bottom of this channel, then you could be looking for resistance within the channel, right? Either way, the way that we're starting to see the pound yen do this today, and obviously euro yen last week. So one by one, you're starting to see yen do some work, and it just, to me, it actually just gives more confidence in shorting, say, dollar yen, whether that's from lower or higher. Just the fact that you're seeing a change in the market, right? And we're going to see the Nikkei and dollar yen maybe actually go into an actual risk-off environment, bonds higher, et cetera, et cetera. All right. Okay. We got a few minutes left. If anybody wants to take a few stabs at markets, questions, what have you, go for it. I'll look to do what I can do. Mahai, Euro Swiss, sure thing. Let's take a look. It's probably a pretty good one, right? All right, Euro Swiss log chart. Okay. Poked through some resistance here, hasn't it? 9 degrees. Let's see if we get something off here. Yeah, I'd look at, if you do get a little higher, I'd look at 117.80 as the next level for resistance. I still think that Euro Swiss is a buy on a longer term basis, but I do think you need to be a little more patient with it. Essentially, the blue line is where you want to buy it, right? Now, that could be on a crash at 13 something, or it could be over here in 2018, right? But this is the slope to follow. This is the level to know, the blue parallel. So, make sure it's log chart and draw a trend line from the Jan 2015 secondary low, not the crash low, and, connect that with the February 2017 low, parallel off of these lows from April 2015, and you get your blue line, which again cuts through all this good price action over here, right? Okie dokie. All right. Going once. Going twice. Sold. All right, so that wraps it up for today's webinar, and have a great rest of your week. About a day and a half left of it, and we will be locked and loaded for tomorrow with NFPs. Might actually get some trades in, but some of the commodity currencies I think are kind of the best looking really short-term trades, with the bigger trades being the Japanese yen 10-year, yield dynamic that we were talking about. Okay? All right. Thank you as always for your time. Much appreciated. And we'll get this up in archive for you ASAP. All right. Bye, guys.